Did you know that accumulation is different than distribution? When we think about those two phrases, we're taught to save, save, save. Put yourself in a pre-retiree or put yourself in a 40-year-old you and you're adding to your 401k or you're adding to a Roth IRA or you're adding to your savings account. You're taught and positioned to build assets, but nobody teaches you how to actually take distributions. As we start to shift from the accumulation phase to the distribution phase, we have to look at taxes. We have to look at how the asset is positioned, meaning is it a growth-oriented account or is it a value account? If you don't know what those terms are, you need to. We need to look at, do you have to sell principal to cover your distribution? For example, inside of a 401k, most 401k providers offer growth-oriented mutual funds. They're there to accumulate and grow over time, and as the market goes up, your share price increases, and you're also contributing to buy more shares and continue to accumulate that account balance. As you shift to distribution mode, if you're in a growth-oriented mutual fund, the only way to pull a distribution would be to actually sell shares. You do not want to deplete your principal in retirement because if the market goes down and you're selling shares, you're compounding your loss to the negative. We want to insulate your income in distribution, which allows us to take distributions without having to touch principal or a reduced amount of principal, so you have more shares continuing to accumulate long term. So when we shift to accumulation and we look ahead, it's really aligning and positioning your assets saying, what is going to continue to accumulate and grow long term, and reinvesting those to accumulate and buy more shares. It's called a double compounding strategy. Then we are looking at where are we going to draw income from and how are we going to draw that income to reduce any principal reduction so you still own your shares long term and can have that accumulating growth without having to deplete your portfolio.